Welcome to Making the Stock Market Easier. I've been doing this for 50 years, making trading and investing easier for folks just like you. And I'm going to help you do that today. And I do this every Wednesday. So remember, put that on your calendar. Okay, first of all, the market has really got mucked up because of tariffs. And most people don't even understand what a tariff is. And I'm not going to go into that deeply. I'm not going to do it now anyways. Let's get to, again, making this market easier. What stocks should you be in while there's all this volatility going on over tariffs? Well, first of all, you want to be in stocks we call that our power stocks, GE. And you can see on my color-coded chart when it went from red to green, it gave us a buy signal. But the point is, you see how tight this is? And it's making new highs. That's called a relative strength stock. And during 2 days, we had two big down days. It held up beautiful, showing relative strength. What you don't want to do is go and buy a stock, invest in a stock that looks like this. Okay, even though it's very, it just looks like a great stock to buy, but you have a lot of sellers above you. Let me show you a better one. Apple. Again, another one, okay? Let's take UNH. You got all these sellers ahead of you. You have to get rid of these sellers. Here's another one, McDonald's. You got to get all these sellers out. And see how the patterns are all messy? When you buy a stock like GE, you don't have sellers ahead of you. You buy a stock like GEV, nice and tight. Again, no sellers ahead of you. These are very powerful stock in Budweiser. So even though the others are very tempting, like Apple or Toll Brothers, okay, no question they're tempting, stay with the stocks that are nice and tight and have relative strength and are proven not to go down when the market sells off. Now, let's talk about what happened here. Moody made a decision to downgrade the United States credit. Since 1917, it's never been done. Now they decide to do it with Trump, probably the only president in the first 100 days that cut about $160 billion in expenses. Why didn't he cut the rating when Biden was in office, when spending was going wild? In fact, we had to go and borrow $7 trillion to bail him out. He was spending money like crazy. And guess what? The national debt went from, $29 trillion to $37 trillion? We have a $2 trillion budget deficit, $1.2 trillion trade deficit. And as I said, $29 trillion to $37 trillion. And they didn't downgrade the credit rating then. They wait for Trump. So this is insane. So what we do, though, is this. Stay with your power stocks. Why? Because you don't have sellers above you. If you buy a stock, even Toll Brothers, looks like it's tempting, or even McDonald's looks like it's tempting, or even Apple. But the problem is you have to get through the sellers, and you don't have the institutional money. They're not participating. The Europeans are not participating because the dollar's too weak. So until they sort this out, and again, remember what Trump's trying to do. Trump is saying he thinks he can reduce the budget deficit, trade deficit, and national debt using these tariffs. But I don't see how that's going to work, because already we collect $5 trillion, right, in tax revenue, and of that $5 trillion, presently the tariffs that we do get income from, it's only $1 trillion a year. It's nothing, and he's going to make it another $1 trillion a year. What is that? So $2 trillion, and by the way, our national debt, or let's say our deficit, our budget deficit, is going to go from $2 trillion to $7 trillion. Why? Because he's going to cut taxes on the wealthy. Okay, he's going to give them a tax break so they save $5 trillion. And he believes they're going to take the $5 trillion and grow the economy. But it doesn't work like that. The very wealthy, if you go and give them a tax break and say, hey, guess what? You haven't got to pay me $5 trillion. You think they take that money and go and buy business equipment and increase productivity? They never have. They didn't do that with QE. They take that money and put it in a pile with the rest of their money. They use opium money, other people's money. That's why this New York Stock Exchange opened up in 1792, so the wealthy don't have to use their own money. So I don't know how this all is going to turn out. I really don't. But I know how I'm going to trade it, and you should trade it like we're trading it. Make sure you're buying the stocks that have relative strength and learn how to sell short, because this market will collapse at some time. And I'm happy to show you how to sell short. Just go to philsgang.com. Also, please hit subscribe and like and share. I'd appreciate that if you enjoyed this. I will see you on the charts next Wednesday, same time, same place.